Hello everyone and welcome to my channel. I am Arnaud Delapierre. Today we are going to discuss oil, this fuel that shapes our daily lives and often drives financial markets. Whether for your investments or your personal knowledge, understanding how to trade oil can pave the way for perspectives fascinating. In this video, I will share my knowledge to help you navigate the sometimes unpredictable movements of oil prices or black gold. The goal is to provide you with concrete information and help you progress in your oil trading practice. Since the beginning of the 20th century, oil has become a pillar of economic growth. The energy giants have built their empire around this strategic product, while states vie for access to reserves. Over time, geopolitics has become heavily intertwined with these oil issues, causing prices to fluctuate in a manner spectacular. Knowing how to position oneself in the dynamic market requires a look at history, but also at the current tensions between producers and consumers. By mastering this context, you will better understand the impact of stocks, cycles, and technological developments on the price of a barrel. The pricing of oil goes through different channels: futures contracts, over-the-counter contracts, or CFDs. Each channel operates according to its own rules and serves a specific type of trader. Futures contracts often require significant capital, but they offer great transparency. Contracts for difference allow more flexibility, although they involve leverage, which can accelerate both gains and losses. In any case, the law of supply and demand remains a major driver of price fluctuations, whether it involves OPEC announcements or macroeconomic phenomena. So one cannot talk about trading without mentioning a reliable tool for receiving real-time alerts. That is where the Notrade app comes into play. Free, I stress free, available on iOS and Android, it sends you clear trading signals and allows you to track your positions at a glance. With the scoring system, you will also find tailored analyses to help you make better decisions regardless of your level. With its ease of use, Notrade can save time and peace of mind while giving you quick access to key information. The fundamental approach to trading oil requires close observation of production policies, weekly stock reports, and economic reviews. When the major producers decide to reduce or increase their outputs, the market reacts strongly. Geopolitical tensions can also cause sudden fluctuations. It is therefore essential to follow the major headlines and know strategic dates, such as OPEC meetings and the release of statistics from the American Energy Agency. A look at global industrial developments completes this picture to better anticipate the turning points in the course of the crude oil. Technical analysis provides an essential complement to the study of fundamentals. By examining the charts of WTI or Brent, it is possible to identify configurations such as support, resistance, and reversal patterns. Moving averages, RSI, or even the MACD prove useful for spotting trends and gauging momentum. This visual tool assists in confirming intuitions and detecting entry or exit signals. To refine all this, the consistency between the graphical indications and economic calendar events enhances the reliability of investment decisions in oil markets. Risk management remains a fundamental pillar for any trader, including in the oil market. Setting an appropriate stop loss and managing the size of one's position helps to limit losses in case of a reversal. Obviously brutal. It is also wise to distribute one's capital across several sectors or materials first, rather than betting everything on a single underlying asset. A structured and disciplined approach helps to stay calm during spikes in volatility. With a predefined plan and clear rules, one can maintain emotional stability and protect their capital in the long term. The choice between short-term and long-term strategy depends on the individual's profile. Some choose swing trading, aiming for movements over several days or weeks, while others prefer day trading, easy to seize quick opportunities. In both cases, following a precise plan and setting clear objectives is essential. Trend changes can occur when markets digest a new announcement or interpret an economic indicator differently. Good technical allocation combined with careful reading of the overall situation allows for identifying the opportune moments to enter or exit a position. A common mistake is neglecting the emotional aspect in trading. Fear or greed can take over and lead to impulsive decisions. Some may also, unfortunately, get distracted by rumors or confirmation biases rather than relying on reliable data. Others still neglect managing their leverage, which can worsen losses. To avoid these pitfalls, it is recommended to set written goals, periodically review performance, and adapt strategy to market conditions. Patience and discipline remain essential for long-term success. Oil prices can be shaken by unexpected events, like a political crisis, geopolitical tensions, or a natural disaster disrupting production. Fires, international sanctions, or changes in domestic policy can also significantly impact supply and demand. Sometimes, a simple statement from an energy minister is enough to cause prices to spike or drop. Top prices. Stay alert to these changes, and adapting your trading can really make a difference. It is then about cross-referencing official information, specialized reports, and sentiment indicators to spot the right moment of action and protect one's capital. Oil is often priced in dollars, creating a correlation between changes in the greenback and black gold. When the dollar strengthens, oil imports become more expensive for other currencies, which can slow down demand. Conversely, a weaker dollar can boost crude purchases. That's why keeping an eye on Federal Reserve decisions, interest rate levels, and the US economic health can inform your oil operations. Understanding these mechanisms can help you synchronize your trades with the global currency trend. Oil production remains closely tied to priorities, map policies, and the availability of deposits. Unconventional drilling, like shale in the United States, has reshuffled the supply by putting more barrels on the market. At the same time, demand is changing due to innovations in transportation and the search for cleaner resources and energy sources. The production adjustments by exporting countries aim to influence prices and maintain their profitability. Grasping these dynamics provides a clearer view of the flows driving the market to position one's capital more strategically. Psychology also plays a major role in success. Staying disciplined in the face of sudden fluctuations requires excellent self-management. Some traders note their emotions after each trade to identify patterns of fear or overconfidence. Others choose to partially automate their interventions to neutralize the emotional impact. The important thing is to know when to stop when a series of trades goes wrong and to maintain a long-term vision with a rigorous plan and or a calm mind. Avoid decisions driven by panic or euphoria. In this sometimes volatile market, consistency often triumphs over luck. To progress in this activity, continuously staying informed is an essential step. Reading specialized websites, studying reports, large organizations, and deepening one's knowledge in finance can build a solid foundation. Trading platforms constantly evolve and offer increasingly advanced features. But one must not forget that a trader's best tool remains their own training. The feedback from those who have been operating for years can also provide interesting insights to refine your methods. Finally, remain humble in the face of the market's magnitude and regularly adjusting your plan conditions success. Thank you for watching this presentation on oil trading. I hope it will help you develop a more solid methodology and undertake your next trades with confidence. Don't forget that a good balance between fundamental and technical analysis is often the key to a successful approach. If you enjoyed this content, I invite you to subscribe to the channel and like the video to help it reach a wider audience. Also, share your impressions or perhaps questions in the comments. I will read your feedback with interest and will continue to enrich this series dedicated to commodities. See you soon!